Last week, the sentiment in the stock market remained optimistic. However, before the weekend, there were signs of an inevitable correction. As a result, all major stock indices decreased by several points at the close of the week. What triggered the correction? Macroeconomic data or political statements? Watch our video review and find out the answer. The Dow is one of the most closely watched US benchmark indices. Last week it dropped the most, hitting 36,080 points. A week ago it was trading at 36,400. The difference is quite noticeable. The Dow dipped mainly due to a surge in inflation which undermined investors' expectations. In addition, the earnings season is coming to an end. This means that the market has fewer and fewer drivers to climb higher. The index could decline to 36,000 or lower in the near future. The S&P500 also failed to retain the upward movement. It's also facing strong bearish pressure and gets stuck at the level of 4,680. Now the short-term outlook is uncertain. The correction is halfway through, yet the quotes did not resume growth. For this reason, analysts expect either an upward movement or a new wave of sales. The mid-term outlook is moderate. Besides, investors are pricing in the risks of asset purchases tapering, as well as the key rate hike. So when the index reaches high levels, bears have more chances to take the upper hand. There might be more fluctuations within the ascending channel. It could slow down the upward movement and keep the quotes in the range between 4,600 and 4,700. As usual, NASDAQ has shown a similar dynamic. It fell significantly on November 10 after the publication of inflation data. Shortly after, it rose slightly to 16,200, trading near this level for some time. It's difficult to identify the prevailing trend now. If retail sales data turn out to be worse than forecasts, then the index may decline. If the data exceeds expectation, it will give a boost to the index. So NASDAQ Composite is likely to be trading between 16,000 and 16,500 points. Let's look at the shares of some companies. For instance, Royal Dutch Shell announced plans to terminate its dual share structure and move its headquarters to the UK. The company said that the simplification would help normalize the share structure under the tax and legal jurisdictions of a single country. Tesla shares weakened again after Elon Musk directed a series of insults at Bernie Sanders on Twitter. In a subsequent tweet, Musk added, "Want me to sell more stock, Bernie? Just say the word." End of quote. Big Brother and Tillis Corp incurred the biggest losses, with the shares declining by 28.68%, closing at 1.8900, and by 28.06%, closing at 17.54 respectively. The total number of shares falling in price has exceeded the number of those that have risen in price by several percentage points. Currently, the stock market is trading mixed. Optimism in the market was fueled by China upbeat data. Retail sales grew by 4.9% year-on-year in October, while industrial production also showed dazzling performance. In October, the figure climbed by 3.5% in annual terms, beating the expectations of a 3% increase. The current reading also exceeded September indicator. However, investors are still voicing concerns about relatively high inflation in the US. I think the Fed is losing credibility, Allianz chief economic advisor Mohamed El-Erian said. We are in this transition of central banks mischaracterizing inflation. The repeated narrative, it's transitory, it's transitory, it's transitory. It is not transitory, El-Erian pointed out. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. Please also leave your feedback in the comment below. See you back soon.